All right, so recently I just got an accountability partner for my risk management. We're doing something to where we are trying to have extreme ownership at the same time have decentralized, command in some way without delegating command. So then we actually take things seriously, and a lot of things taking things seriously is usually giving presentations, have public transparency of just what we're doing, how we're doing it, and expectations with that, and that are self-imposed, and things that could be discretion that we would like stretched as a goal, or something that's possible. That's kind of what the other person's there for. Is like, no, I think you could do better than that, or no, I think your assessment's correct. Like it was a difficult situation. Things that would give us more objectivity, but at the same time, be there to help kind of make that call. Not necessarily give us like pro tips, even though that could be a function of this accountability partner. But that's something that we might do on the weekends, like a mastermind. So like the overall thing is develop a risk management plan, and we got a trade plan. And in the trade plan, I'm going to put the risk management plan. So I made a template. I borrowed it from just basically Google. I found something I liked, and then just added rules to follow. Just because that's pretty much what our accountability is going to be about. Is risk management and following those rules. So I gave it to my accountability partner, and we're going to be chopping it up, and then every day we're going to make a video, just the trade plan, and then we're going to do a post review on just the day, and the trades and the setups, and just kind of go through it, kind of like what you would do in football. You would just do the replay, and then just see and critique just how it was done, and based upon like the rules we set up. So that's gonna be C. So that's pretty much done, and we'll keep on adding more to it. So as far as like more research to do, increase the bot efficiency. Like, how do we do that? So that's an interesting kind of question to go down of how do we increase the bot efficiency. I've come up with like a couple ideas. One is using, let's see, let's get rid of this different color here, and then we want no background. So one is using the auto squeeze, which is the color we got here on the blue, and it shows that it's squeezing. So on the 12 hour, I'm measuring to see if it's let's take off the magnet. If it's less than 1.8%, if it's less than 1.8%, then I could do the reversion setting. So this bot has two settings. So one type of discretion we have to figure out is when to do trend setting and when to do reversion setting. And the reversion setting would be when there's a tight squeeze of like greater than 1% but less than 2%, or less than 1.8% specifically. So like if there's not enough chop, then it's not even worth trying to trade the range. But if there is some sort of range in there, for the reversion setting, it does really well at 1.8%, and we can measure that here on the 12 hour. Now on the 5 minute, let's go ahead and just minimize that. We're looking for the New York Open, so I figured out how to get an indicator that would mark the New York Open, and the quick version of it is that not to trade during the part where it's squeezing or blue on the 5 minute on the New York Open. Just pretty much to turn it off, or to maybe do a reversion if we start going out and then we start getting rejected here, and then that shows in the next candle, and just maybe playing the downside of that. I don't know if that's like really profitable 2-to-1 here. It's kind of questionable. I think we have that tool available to where we could. Oh no, we don't. Here it is. I think risk to reward. Yeah, but that's the long side. We could still do that. Let's see, the down part right here, and then profit here. So it's barely 2-to-1. Here, I gotta adjust it. There we go. So I guess it's 2-to-1. It would be inverse of this. So I guess it might be worth playing that range, but we would just kind of take it one step at a time. One is just figuring out, okay, are we on an auto squeeze with the New York session? Because this one was like squeezed all the way up here, and then when it finally broke, that was the time to get in, as we can see here. And then we move on to over here. We had a nice trend here, so that would have been good to play the upside and downside. And then here we had a nice squeeze and very small range. Like, see, this is less than 1%, so like it doesn't even look like it's worth trading. Now, if we go back to the beginning, let's see how big that was on the New York session. Let's say we measured this. Yeah, I don't know. It's less than 1%. It almost looks like it's not worth trading the that kind of move. So, like, I would wait until it gets finished, and then I would turn it on. And if it turns back on the auto squeeze, then I would just disengage the bot. But I think that's kind of just like a beginning test for live testing to see if that works. So that's one part. Another part would be, let's see if we can get that chart open, would be this one where we use the BAUS bands. And I'm thinking the 3-minute and the 1 hour. So the 1 hour, whenever the dark spot separates from the pink and green, this dark band, once it separates, then it's no longer trending. It's now choppy. And to take the market structure with that and see just kind of how it progresses from there. And then here on the 3-minute, we have the same deal, and the idea is if we get to a point where it's no longer trending, like here we could see trending. Let's see, New York session. So this was last week, and we could see we were trending to the upside, and it was squeezing. It almost looked like it was good for a trade to the upside, but then we separated, and then we came down here. So I was thinking either the 3-minute or the 5-minute to where you could see here in the 5-minute it hasn't connected really, but once we started to get a direction, we also got some signs. So I'm thinking the 5-minute would be really useful. We'll just take off the Oasis here, and then we'll make sure we keep and then we'll put the trend lines there. Is this at the close? It's at the close. And then we'll use the 3-minute for the Oasis alerts. And then get rid of this trend line. So that way, on a small time frame, we could tell when something is ready to turn on the trend bot, which is when the dark lines are touching the pink or green lines, and when it's not, and when it's just going sideways, to really just turn it off. So here we would turn it on because we're connected to the green line. The dark line is connected to the green line, and then it's just a matter of when we break out and we would look to the auto squeeze for that. Or we could just see if we could get entries to the upside, because that's kind of what would be the signals that would be turning on during that time if we were to move to that area. And we can see here we got some entry signals telling us to get in to get that move. And then it's going to be some discretion when it breaks away, and it's like in the middle here, like that day. But if we were to reset it and bring it to the most recent price, we are disconnected from the trend, and we were trending down for a little bit over here. Some good, maybe possibly some good entries like around here. Maybe put a moving average channel to really capture those things. Moving average channel. There we go. And then we would be able to see just some possible good entries to the downside with some swing highs, swing lows. Once we get connected here on this this trend that we could monetize to the downside. But that's pretty much it. And then maybe we could do like 5-minute market structure breaks too. That's another thing I'm thinking along with the trend line. But I mean, I'm thinking if we did just the trend, I don't know. Well, we'll take a look. So we saw we broke the 5-minute market structure, and it worked really nicely in just the trend to the downside. So yeah, I think we'll do the 5-minute market structure breaks. It works really well for determining trend with the bounce bands. When the bounce band and the market structure break works, they're both in confluence. I think it's going to work really well for just turning on, turning off the bot on the trend. So like not only did we focus on like just the opening range and just the breakout and what happens and how we're going to trade it, but also just like when to turn it on, when to turn it off, and when to use reversion and when not to. Obviously, when we come into some swing highs and swing lows, I'm going to want to turn on the reversion to get an entry on the beginning of a trend to the downside, and then use trend mode for momentum entries to the downside. But I think that is it. Swing pivots, yeah, high low, and that's kind of gonna assist us on just our entries to the downside like it did here. The swing pivot, we could set an alert for when it touches it, and then the goal is to catch an entry whenever it tries to pump into there, because there was a stop hunt, and that's how we would do it. So I think for the most part that's gonna be how we would increase the bot efficiency, is just setting alerts and keeping an eye out for this bounce band and swing high, swing low, and the alerts with that and the auto squeeze, and keep an eye around the New York Open, the New York Open, as far as like a range breakout strategy. So I think that's how we would do that. As far as a position building plan, this is going to be like the most interesting thing, because it's not easy to build a position building plan. I think we would have to use micros to really do this. I was really relying on the ES minis to push myself forward. I mean, that's how I got such a high thing on Tuesday. But it's something I can't rely on, because the drawdown, like, I mean, a losing day can, 1,000 each account could just come up so easily. So the goal is just to make that as hard as possible to hit like a nice drawdown. We don't want to have a nice drawdown. We want to have almost like no drawdown. And the best way to do that is just really planning things out, and specifically how much we plan to stop losing. So I made a sheet for risk management, and we're going to look for it. And we're going to go, it's a Google, let's see, it's a spreadsheet. And then risk ladder. Nope, that's not that one. Percent increase entry filter. This sounds more likely. Maybe a Ninja. Okay. This is better. It's the Ninja one. Ninja risk management calculator. Alright, so this is here. It's got my risk to reward stop loss ticks. Oh, okay. This has got like a bigger stop loss maybe. But this is assuming we have all 7,500 cash on hand, and 1% of the ES contract would only give me half of that. But in terms of the micro, I can get 2. If I do 2%, I can get 4. And the contract rate per tick is $12.50, and then on the micro it's $1.25, because it's basically 1/10 of that, 1.25, versus $1.50. And then the total loss per trade, so it basically took 15 times 12.5, which would be 187.5, and then 15 times 1.25. So this one's incorrect. I think we were using different, so $18.75. So that boosts how many contracts we can use on the micro. But we're looking to do some kind of position where we could put on a scalp and a swing at the same time. So then if we get a runner that's able to run, we would be able to benefit from it, and at the same time we could minimize drawdown by taking profit early with the scalp. So I'm thinking maybe with the micro MES we do around 4 to 8 contracts per position, and one position will be a swing for a higher risk to reward, and then the other position, because we're splitting, so it would be 2 and 2. One contract of 2 micros will be a 5-to-1, or, a large swing, or 10-to-1, and then one contract of 2, one trade of 2 micros would be for a 2-to-1, just to get a quick profit and get both of them to break even, so that way we could position ourselves for the best chance possible win. And those kind of that kind of insulation and that kind of profit from the trades will enable us to be able to take more risk in the future. But first it's just being able to get this correct and consistent. So we most likely will do a 2 and 2, and then if we lose one, we'll bring down to our risk to a 0.5%, so we only lose 1.5% per day, and then that would give us one more shot to make a scalp. And if we lose that scalp, then we'll stop, and we'll just count that day as a losing day. But that means that we really have to choose our setups correctly and be really picky, so we don't waste those 2 entries. Basically, it's 2 trades per day until we really get the accounts higher. But that, I would say, that is the part on the risk management that we're going to do. So we'll get rid of this, and we'll put that we're going to do one first trade of the day will be split entry, 2 micros for a swing, and then 2 micros for a 2-to-1 scalp, so 15 to 30 tick profit, 15 stop loss, 30 tick profit. And then if they both become losers, do one more trade for 2 micros as a 2-to-1. And then no more than 1.5% loss on the day. Boom. So that is, and if we end up getting it back, and we do a 2-to-1 scalp, I think that puts us back into normal standing. I'm not 100% sure of that, but we could calculate it. So if we lost, so 4 micros, 4 times 1.25. So let's do the 1.25 times 15 times 4 micros puts us at $75. Now, if we were to, if they become losers, $75 loss. Period, $75 loss. And then if we win on the 0.5%, or 2 micro trade would put us, it would be 30 tick profit, 1.25 times 30 times 2. Put us back break even. So if we win on the 0.5%, or 2 micro trade would put us at break even or wash of $75 gain. Okay, and then we would be able to attempt again if we wanted, put on a swing and a scalp again. No more than 1.5% loss per day on the day. And that would be how we would build positions. If we end up winning those positions at break even, we'll continue to add to the position on both the swing and the scalp until it becomes no longer beneficial. And it gets pretty obvious, like if none of the trades are sticking and you get them to break even, but none of them are sticking, it doesn't make sense to keep on trying. But obviously you'll either hit profit or you'll hit your 1.5% loss on the day. If and the scalps will be able to keep track of that. I might make a sheet just to keep track of -1, and then if we get that scalp back, plus 0, and the goal is to keep track of how many scalps succeed and how many trades end up losing, to keep track of where are you? Are you in net profit or are you net negative on the scalps for just keeping you in for the day? So that might be an interesting kind of sheet to get together, which is like a spectrum, and just seeing, okay, are you net negative on the scalps, and have you hit your limit? Or because this is only for one iteration, once you hit a multiple iterations, you need to figure out, okay, are you do you need to reclaim and have a wash on the day, or did you hit your 1.5% loss on the day, or are you in profit by 5 times? That's kind of something you need to know. And I think if you get a spectrum to just move kind of like a toggle of where you're at, then it's easy to keep track. Okay, like if you got a success on a scalp, okay, you're +1. You got a success on another scalp, +2. You lose one trade, you bring down 1. but you're +1 on the day. So you get one more trade to get in, and then you're break even, you're neutral, and then that means you got one more to really, if you wanted to push your luck. So that's something that I'm looking to implement. Maybe I can create it just as easy by creating a whole bunch of columns. So insert like a table. So the table will have maybe it'll be like 8x2, and then this will be just kind of the indicators. So -1, say 0. So this is a one trade loss. So one more loss on the 0.5%. So if you hit -1, you have to win the 0.5%, which is the 2 micros. If you don't, then you're done for the day. So I guess we would use an X just to mark where you're at. So for every scalp you win, so one scalp is equal to $75, and each $75 is equal to like one possible loss you can have. So if we get 2 wins and we have 1 loss, we go down to +1, and then depending on how many scalps we get versus lose will determine just where we're at on the day of when to stop. So I think that's kind of the way we're going to do it. We'll start out at 0 and see if we get our first scalp win for the day, and then just keep on building. And that's how we end up winning for the day and not losing. So I think that's how that's going to go.